Good afternoon. It's Jeffrey Christian of CPM Group. It's about 12:55 in the afternoon here in New York on Friday, the 23rd of May. I'll talk about the gold, silver, platinum, palladium prices in a bit, but what I really want to talk about today are the two most important developments presently in the gold and silver markets. We are releasing our silver yearbook next Tuesday, so we're about to finish it up. This has been a very busy week. I gave 3 presentations at various conferences related to mining in New York this week. And a lot of that caused me to sort of say, what's really important to these markets as opposed to the standard, let's go through the litany of supply and demand. And I want to talk about the two most important factors. I also have a couple of comments about cryptos and then we'll talk about the markets too. The two most important factors and trends right now are that investment demand remains strong. It's being masked in silver by gross sales, but the gross sales are diminishing. Overall, investment demand remains very strong. And the second factor is that investors are not selling their gold, and many are not selling their silver. They're looking at the state of the world and their countries, and they're deciding to stay long, and they're hedging instead. Now, I'm not talking about the stable, disenchanted selling that is continuing, but diminishing on the part of some investors. These are people who fell for the Wall Street silver scam and the squeeze silver scam, bought silver at high prices in 2021, early 2022, and now they've been selling whenever they see the price at $29 or $30 or $32 or $33 an ounce. We saw a lot of it at $35 an ounce recently. I'm talking about really rational, intelligent investors, many of whom have been long gold and silver for many years. And they had realistic reasons and they had realistic outlooks for how high gold and silver could rise in this cycle. And many of them were thinking, well, if I see gold and silver prices rise into 2024, 2025, 2026, the way CPM Group and other people have been projecting, predicated on economic and political trends that are realistic, maybe I'll take my profits. We're there now, and we have high net worth individuals, family offices, institutional investors, and others who are saying, we're not taking our profits. We're going to stay long because we are very much concerned about the state of the world, and economically, politically, socially. And we don't see things getting better sooner. So we're going to stay long. But with prices as high as they are, with prices as high as CPM Group and others were projecting they could get in this cycle, we will take and put in place some hedges so that if the prices do come off, either in the next 6 months or if this is a cyclical peak, we don't think it is. We agree with these investors. If this is, and prices do come off, I'm going to be protected. I'll have capitalized some of my gains, and I can actually take some profits out of my hedge. And we're seeing that happen. It's not the first time. I bought a 100-ounce bar of silver in the early 1980s, around $6 an ounce or so. And I did that because we were doing a survey of sellers of 100-ounce silver bars, and we wanted to see what the premiums were, what the relative costs were at different retail outlets. And I bought a 100-ounce bar at the retail outlet that had the best price at the time. It was actually, at that time, a company no longer exists, Sunshine Bullion. It was a subsidiary of Sunshine Mining at the time. And I held it, and the price of silver fell. And I thought, well, at some point I'll sell that stuff. And I had a target price, which was north of the $6 that I had paid for it. And I thought, I when that price came there, I said to my wife, I think it's time to hold on to that silver, and she agreed, and we did. We ultimately sold that and converted it into silver maple leafs, but that's beside the point. We're seeing this right now, and I think those are the two most important trends. Here are some charts that sort of highlight them. This is gold investment demand. Gold investment demand had gotten down to 24, 25, 22 million ounces a year in the years 2021, 2022, 2023. It had spiked up. It had been around 17 million ounces, these two light blue bars that you see in 2019 and 2018. It had spiked up to 40 million ounces of net physical investment demand by investors on a global basis in 2020 during the pandemic and the economic lockdown. And then it had come off to about 25, 26 million ounces for a few years. It got up to about 38 million ounces last year, and it could be 39 million ounces or a little over 40 million ounces this year, depending on how the world shakes out. Investment demand for gold has been strong. That's the first point. And it's also been strong and getting stronger for silver. Now, these are net investment demand figures, and you can see it got very low in 2023. It was around 50 million ounces. It got up a little over 70 million ounces last year on a net basis. And our estimate is that it could be around 135 to 155 million ounces this year on a net basis, depending on how the world shakes out. But those lower figures in 2023 and 2024 were masked. These are nets. And what you saw was stronger than that in terms of gross purchases of physical silver bullion by investors. But some of that, a large part of that, was offset by gross sales by those disenchanted investors who had bought high, having fallen prey to the squeeze silver scams of 2021, 2022. We think that selling is dissipating, and we think that some of those people who still are inclined to sell and take profits that are getting to the point where they're saying, if I wait until tomorrow or next week to sell my silver, I may get a higher price. Because that's what happened in 1979. So what happened in the early Aughties. You had investors who had been selling their silver stop selling so much and wait. And that actually provided a lot of the impetus for prices to start rising, leading other investors to come in and buy, and leading some of those investors that had been planning to sell to actually buy more. So we're seeing stronger investment demand for gold and silver, strong enough to push the prices higher. And then we're seeing investors selling, hedging. Now, I've been providing hedging strategies since the early 1980s. And through most of that period of time, my hedging strategies related to producers, smelters, refiners, and fabricators, industrial users of precious metals, natural gas, aluminum, agricultural commodities, and such. Most of our hedging strategies have historically been for commercial companies. But right now, we're doing an increased amount of advisory work on hedging almost exclusively for institutional investors and high net worth individual investors. People who say, hey, I bought gold a long time ago, $1,200 an ounce. It's $3,300 now. Maybe, I had been planning to profit when we saw these kinds of prices around this kind of time. But given the state of the world, I want to stay long. So instead of selling my physical metal, I'm going to hang on to my physical metal, and I'm going to hedge. And this is a strategy that we priced for a high net worth individual / institutional investor on May 2nd. I'm not quite sure what the price of So gold was at the time, I think it was probably around $3,150 or maybe $3,300. I don't really remember what the price was on that day. But what we did was we gave that producer, that investor, a floor of $3,000. And we paid for that floor by giving up $200 of any upside over $3,700. Is a zero cost compounded premium strategy that we've used since the mid 1980s when commodity options were legally allowed again in the United States. So if the price fell below $3,000 or even toward $3,000, the investor was protected from some of the downside. If the price had gone back to $1,200, the investor would have the ability to sell his or her gold at $3,000 an ounce. If the price rose to prices above 3,500, i.e., into levels that have never been seen before, between 3,500 and 3,700, the investor would have the exposure to sell his or her gold at $3,500 an ounce, which would be a record, a profit because it would be unprecedentedly high. And then over 3,700, the investor would have the right to sell at $200 less than the market if it wanted to. Or it could have a mark-to-market loss, not really a loss, a mark-to-market reduction in its profit of $200. And if CPM were wrong and the price went to $10,000, that investor's gold would be worth $9,800 an ounce. So giving up a little bit of the upside in that kind of scenario, but giving itself downside price protection and the ability to make money if the price fell. And these were for October expiration. So they were to cover price exposure on a short-term basis should the price decline during the summer months as we thought was possible. Now I'm going to talk about precious metals. I'll talk about them now. Gold prices as we speak are $3,357. They got a little over $3,360 this morning. They are up about $53 to $62 an ounce from yesterday. You're starting to see investors, another wave of investment concern because you're seeing more belligerence on the part of the U.S. government, both toward its citizens and toward other countries. We had Mr. Trump today come out and start threatening like 50 some odd percent tariffs on all goods and service, all goods imported from Europe or from the European Union. He's been very belligerent toward South Africa. And you're just sort of seeing that people are saying, okay, we've gotten a little bit of a pullback from some of the hostile economic and political rhetoric and saber rattling, but it's still there and it's going to continue. So I think that's one of the factors. Another factor is that you are approaching the June delivery period, which starts at the end of next week for the COMEX gold futures contract. And so you've got shorts rolling their June contract forwards into August and beyond. Our expectation is that the price may rise strongly some more over the next week or two, and then possibly come off from June through August into September with higher prices later. So That's what we're seeing in gold. We're seeing a similar pattern in silver. Again, the silver price has been somewhat restrained relative to gold by the fact that you do have the stale bull liquidation going on. It does appear to be diminishing. You've seen relatively healthy industrial demand over the last month or two. That has reflected to some extent strong industrial output in advance of potential tariffs and weaker demand later. So there's been some purchases of materials in advance of the potential for future tariffs and lower industrial production and demand for goods and services. So what you basically have done is borrowed future demand and brought it forward into March and April. And that has provided some additional strength to silver. Our expectation is still that the price will rise. We are seeing some diminution of stale bull liquidation, but the market's very well supplied right now. Platinum and palladium. Platinum prices have risen very sharply in the last couple of days. They have broken out of, they've broken out of the bulk of what has been their range for the last 9 years. For the last 9 years, platinum prices have traded mostly between 800 and 1,050, $1,050. They've gotten up to 1,088 over the last couple of days. That reflects some speculation that Trump will threaten sanctions on South Africa. He did one of his little video stunts with President Cyril Ramaphosa of South Africa earlier this week, where he brought him into the showroom, which used to be the Oval Office, but now it's a studio for skits. He's talked about the white genocide that hasn't happened. The data is, there have been like 24,000 murders last year in South Africa. 8 of them were farmers, and government statistics don't distinguish between black and white murders, but not exactly genocide. 8 murders. Most likely they were related to thefts, burglars breaking into rural farms, isolated farms, and killing the people in committing the burglary. That tends to be what happens in farms there. And I can tell you, because I've been involved in South Africa since the 1980s, that there hasn't been a white genocide. And there haven't been things. And, Trump does this stuff, and he gets head of the EFF, which is the Communist Minority Party. The head of the EFF used to be the head of the ANC's Youth League, but he was too much of a hothead, so they fired him and kicked him out of the party, and he created the EFF. And he, is this firebrand, racist, communist. And Trump looks at a video of that. It's just like total nonsense. But given that Cyril Ramaphosa is an incredibly intelligent person who pushed back and said, that's not true and that's not there. And this picture that you're showing, that was a memorial to 2 farmers, a man and a woman, who were murdered in the commitment of a burglary on their farm several years ago, and that was a memorial to those 2 people who were murdered. It wasn't a line of graves from a white farmer's genocide. But that doesn't matter. Truth has never gotten in the way of what Mr. Trump wants you to believe. So in that environment, with Cyril pushing back, there's been some speculation that he may threaten sanctions on South African platinum group metals, and you've seen the platinum price spike up. That'll be over soon, and then the price is expected to come back off and go back below 1,050 and continue to trade in that range that it's traded in for most of the time over the last 9 years. And palladium prices, they've also risen. They haven't risen as much because a lot of speculators don't see palladium as being much as exposed to South African supplies because a lot of the palladium comes from Russia. Russia used to produce much more palladium than South Africa. Recent years, they've both been producing about the same volumes, but palladium is seen to be less exposed to interruptions in South African platinum production. That may not be an accurate representation, but that's the way the market thinks. Now, I did want to talk a little bit about cryptos because I ran across some very interesting data. The average daily turnover of cryptos, currencies, is estimated by the crypto industry to be about $200 billion a day. That compares to SWIFT clearing transactions of about $22 trillion a day. Now, the $22 trillion in SWIFT transactions, money being transferred from one bank account to another bank account electronically, $22 trillion a day, average transactions. That may be surprisingly large to a lot of people who don't realize how big the global economy really is. But more importantly, it's more than 100 times the volume of cryptos. And that's important because if you look at in 2024, there were $2.2 billion of value, if that's what you want to call it, of crypto thefts. $2.2 billion of crypto thefts last year, $7.7 billion over the 3-year period 2022 to 2024. Yeah. So there's an enormous insecurity in cryptos relative to SWIFT. The value of SWIFT thefts is minuscule. It's a fraction of 1% of the transactions that are occurring. It's a much more secure system. And I just think that's just another factor there that's going on. CPM Group will not have a video next week like this. We will have a 1 to 2 hour silver market outlook video with a Q&A, question and answer period. It's marking the release of our 2025 silver yearbook. This was our 2024 silver yearbook. And you can see here we have a number of sponsors spread across the industry, not just mining companies, but also companies that use the metal, companies that refine the metal, companies that provide retail investors material, and companies that provide other information to them. So we have a range of companies spread throughout the industry that support our yearbooks. We've been taking sponsorships in the silver yearbook for 20 years now. No, 30 years, 1995. We started that. Before that, we did not have a sponsorship, but we charged $2,000 a year for a quarterly subscription to a Silver Survey quarterlies, which were there. We converted it into an annual, and we made it $160 for the annual book, which you can order online at our website. You can register for this silver market outline online seminar. It'll be our silver yearbook. These are our conclusions, our updated statistics for 2024, our outlook for 2025, and then it opens up into a Q&A. You can register at this URL linked to our website, and you can do that. We won't do a video on Tuesday like this because we're doing a 2-hour online seminar on silver. You're welcome to join. We look forward to seeing you there. And then we will be back with another video on Friday, the 30th of May. You can always go to our website, read about us, learn about us, order our yearbooks, subscribe to other services. and send us an email at info@CPM Group if you want us to work with you to help you improve your understanding of the markets and avoid falling victim to nonsensical conspiracy theories and such. People who really don't understand how the market works, but love to pontificate about it. And we can help you with your metals investments as well. That's all I have for now. Take care. Have a good weekend. Take care of yourself. Take care of those around you. Try to do something good for the world and hold on tight. We'll see you next week.